Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 9th day of October, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets with gold trading higher, silver, platinum, and palladium all lower on the day. First to gold, currently trading up about $2.60, $12.24.10. The low today, $12.22.40, the high $12.33. Silver also trading slightly lower to in essence unchanged. You can see that on this daily chart. It is a tombstone doji is the actual candlestick that it is forming. Currently trading at $17.35 in terms of the low and the high. 34 on the low side, 71 on the high side. More on silver in a little bit. Of course, to get a good sense of what is motivating or predicating the moves today we're witnessing in the precious metals markets, I draw our attention to two markets, equities and the dollar. First to the dollar, we're looking at a daily chart of the dollar. You can see on this green candle here, it is currently trading higher, 85.64. It's hit a low of about 85 on the day, but is well off of the highs or well off of the lows, trading more near the highs on the day. And of course, the big news is the equities markets. You can see this tremendously long red candle back down to the bottom of our channel line, and it has given back all of the gains of yesterday and then some. So we've got tremendous pressure right now in the equities markets, dollar trading slightly higher on the day, which moves us into how we are currently analyzing gold. I want to look at short-term as well as interim perspectives. And in terms of the interim perspective, and that's what we'll look at first, look at this daily chart here. You can see we're definitely trading higher on the day, but over these last 2 days, we've had these double shooting stars. Very, very interesting formation, because what happens in this type of a candlestick is it makes an extreme high, cannot hold that high, and closes very, very near the open of that trading session. But I think most importantly in terms of an interim view, and let me go ahead and blow this chart up, is this weekly chart that we are looking at now. This is of COMEX Gold, of course, and I draw your attention to the fact that we looked at these series of bottoms that we've had in the market. Of course, back here we touched around 1180, then we hit this twice, a triple bottom in recent history. It absolutely appears, at least on a tentative basis, that we've gotten that bounce. We found some sort of a support here. You can see on the weekly charts that is now becoming an engulfing bullish. However, and most importantly, a single trading day or a single trading week does not really predicate a reversal or turnaround. And so right now I am still looking at this most current rise in the gold market as really what I'll label a bump, meaning it is a counter trend to a dynamic trend, which is in essence lower. So as this market comes down, we want to plot a couple of different fib retracement areas so we can attempt to plot different levels of resistance if the market continues to move up, to see where it stalls, to see where support is, to see where resistance is. And this is what I'm looking at. This is based upon a fib retracement, in essence starting from the top at 1332 going down to about 1187, just shy of the bottom of the market. When we do that, we do get a band at around 1234, and that's where I'm currently pegging very, very short-term resistance. We can see that resistance right in here as the market has tried to genuinely take these particular price points out. Bull traders were unable to push it above that, and the market would dramatically trade lower. The other interesting thing, and we're looking at a half-day chart, 720 minutes. The other interesting thing that we're seeing is it's all a series of highs here. We're not really getting any of the bodies, meaning the relationship between the open and close during that trading session. We are also backing well off of the highs that we got. Highs came in pretty much through the night. Now, support. We should have some minor support at around 1221 and stronger support at about 1208 in the market. So based upon the most recent activity within not only gold, but equities and the dollar, my suggestion right now is to maintain our current long positions. We will be looking to move the stops up, and we're probably going to move them up just below this 1208 being some real dynamic support, but it's also our entry level into the market. So by moving it up, we basically protect any drawdowns. We don't protect any equity yet. In terms of resistance, we want to see if the market can break above 34. If it can, our next real target and probably our exit strategy is going to be to get out between 34 and 51. So maintain current long position. So what about silver? As you know, I have been sidelined on silver. My sense is when you have an equity pool of risk capital and you're allocating it to where you have the best potential return between gold and silver, I've been voting for gold. Silver has been lackluster. It has not been the kind of market that I feel is going to provide us with the same kind of profit potential as gold right now, and therefore my recommendation is to sideline on silver. Of course, that is not to account for physical purchases of silver. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.